Hi, thanks so much for tuning in for another episode of Ask Spurrell CPA. Today we are talking about small business fraud risks. I have Laura here with me today again. So Laura, I'm sure you've gone through some fraud risk in your auditing courses at Grant McEwen.
Yeah, absolutely.
So now we're gonna dive through them in the real world and see what we can get the average small business owner, some tips on that. So the quote that I have for you today, it's Michael Gerber, author of our favorite E-Myth here, and it says, the fatal assumption is if you understand the technical work of a business, that you understand the business that does that technical work. So those are two separate things, the technical work in the business and running the business that does those technical work. And as always, the statistics, 50% of all Canadian small businesses fail. And, often the top three reasons, one of those big three reasons, they run out of cash. Really, if we can, sometimes you're going to run out of cash because of bad business decisions, or trouble in the market or competitive market, but we do not want to run out of cash because of a fraud issue. The story is we have, business owners, they have one person in charge of the accounting, they have a filing system that no one else is familiar with, or they have records that they're not quite, up to date, and all of a sudden they realize money is going missing. And now the witch hunt begins. So Laura, what are the questions that business owners should be asking, probably even before this starts happening?
Why is having only one person assigned to a financial task a significant risk?
This is auditing 101. And what we're looking at, before you do an audit on an entity, you're looking at what are the risks on that entity. And kind of one of those basic risks are if there's only one person in charge of this thing, even if it's nefarious reasons, it's easier for them to get away with it. They're the only person that ever take a vacation. No one else ever does that job. You'd have no idea on what that variation, what normal actually looks like, because we have one person doing it all the time. And even if there is nothing nefarious about it, if they're honest, they could be making a mistake. It could be someone outside the organization. That person doesn't catch it. Having only one person involved is not normally advisable. Most business owners, they think they don't have another choice. But outsourcing is a very powerful choice that often you can outsource to an organization like ours, of course, even that, that they can, have multiple people involved in it for cheaper than the cost of one staff member. But if you do it in-house, you have that big giant risk of that one person, running the accounting.
Do banks check the signatures on checks?
Okay. So here's a myth of being an entrepreneur, and you go into the bank and you start your business account and they have you sign that signature card and you feel really good and you think there's probably some sort of handwriting analysis in the back who works for the bank. And I have news for you, I'm going to break someone's heart here, is the bank does not check those signatures. And they'll tell you they check them, but I've tried to ask the bank, do you check 1 in 100? Do you check 1 in 1,000? Do you check 1 in 10,000? 1 in a million? Maybe they check them, but they're checked so sporadically, they might as well not check them at all. And if you don't believe me, if you have two bank accounts, a business and a personal account, take your business account, write yourself a check for $1 and sign it with a happy face, not even a signature. Sign it with a happy face, put it into your personal account and see if it cashes. It's going to cash. The banks do not check those signatures. You need to look at checks like cash. They should be under a lock and key. They're the single biggest risk of, fraud in most small businesses are those checks. They should be under lock and key. If you have $100,000 in your corporate account, you should look at one check like you would look at a stack of $100 bills totaling $100,000.
How does using an electronic fund processor on a set schedule reduce fraud risk?
Okay, so instead of using the checks, let's say we got an EFT processor. So no one can just go take a check and sign it with a happy face and cash it, or checks they can cash twice these days with people. The TD had a big problem with checks getting cashed twice. I think they've corrected it, maybe, so they say. If you have an EFT funds provider, you can transfer that money out of your corporate account to an EFT fund provider. Let's say for all your payroll and payables, and good outsourced accountants, they can set this up so all of your payroll and payables, they get totaled, and you approve that total, individualized, itemized total, and that amount gets transferred from your bank account to another trust account who does the EFTs for you. And then when you look at your business bank account, instead of having withdrawal every single day and you have hundreds of them, maybe in 1 month you could have a couple of hundred cash disbursements or withdrawals every time you write a check to every person on staff and every disbursement to a payable. And now all of a sudden you have this EFT provider, you have one cash disbursement every 2 weeks. Well, guess what? You no longer have to be you no longer have to be a forensic accountant to know that there was a problem. If there was a charge that comes out of your bank account that you didn't approve, it just sticks out like a sore thumb. Instead of having 2 of them, you have 3. And it's just it's an easy process to do. It's keep it simple, stupid, and it doesn't have to be difficult. You can put those controls in place so the money is dispersed at a set time. We reduce the number of transactions that are actually appearing on the statement. That way, any fraudulent transactions, they're actually just super easy to identify.
Is petty cash a fraud risk, and how can you use a debit card to avoid it?
Yes, this is 2019, people. You no longer need petty cash. This is the newsflash in business organizations. They think I need petty cash, so you have to pay for it. Everybody and their dog accepts credit card and debit card. And often credit cards can be a little bit cumbersome. You don't want every person in your team to have a credit card. That can be hard. But here's the move, where you have someone, and it might be person A one day it has to go buy the coffee, the office supplies, and the next day it's person B. Get a debit card. Get a debit card from your bank. These debit cards, a debit card that can't be used to issue any online transactions. If anyone sees what's on the front or back of the card, nothing's going to happen unless they have the card with them. Set a limit on it of, say, $500, and this is now your new petty cash tool. Not only is that easier to account for, but it's dramatically less risk than having cash and paying for expenses in cash, which not only are a fraud risk, but they're also an audit risk too, because it's just always the CR auditors, did this really happen? So that's always a problem as well.
How do people use dummy corporations to defraud a company?
Okay, so just because you're paying a corporation doesn't mean that corporation is legitimate. If we have a check going out every month to XYZ Corporation, there's nothing to say that that's someone inside the corporation or maybe someone outside the corporation who's just set up a dummy corporation and they just bill you forever. So just because it goes to a corporation, we have to know who these payments are going to. And if you don't recognize, a name on these cash disbursements that's going out from hopefully your EFT provider, not your checks, that's going out to through your EFTs, or you don't recognize the charge on your credit card statement, you don't recognize that name, that can be a problem. Dummy corporations are often used to submit a bill, get a payment for a service that really never existed.
How easy is it for people who control payroll to inflate earnings?
Unfortunately, it is very easy. And the main defense around that is not having one person only processing payroll, which is very difficult for most small businesses to do internally, which is why big benefit of outsourcing. Is very easy for someone to put an extra $1 an hour on a paycheck, or an extra hour or two every payroll, or every so often, and inflate the earnings. And very difficult for the business owner to you got a staff of 10 or 20 or 30 people to pick out those extra 2 hours. That can be very difficult. So that processing the payroll has a high degree of responsibility. So auditing it when you can, sporadically, on a periodic basis, and then putting more than one person in charge of that. That's the way to go about that.
How can people use payroll remittances to defraud a company?
Okay, so, and this one can be even harder to catch. So, number one, they're inflating hours, or they're inflating their wage rate per hour to an employee, or some sort of reimbursement or something like that. But number two, it's payroll remittances. So you look at what we're paying each employee, and then you have this lump sum payment that's going out to CRA. These are the payroll deductions that we got to send to CRA. And let's say that employee A had $500 worth of deductions. But instead of sending the government, and employee B had another $500 worth of deductions, and employee A is the one processing the payroll, instead of them sending $1,000 to CRA, they send them $1,500. And then when it comes time to process their T4, they put that extra tax paid on their T4. And although they didn't get the money directly in a roundabout way, they're going to get it on their personal tax return. And that it can be very difficult for the average business owner to see happening, because you're seeing that actual payroll amount. So again, it comes down to having more than one person in that. Or you can be checking those individual pay stubs if you're adding them up, those deductions, so total the deductions that are actually issued to CRA, because it's going to be really difficult for the average business owner to see that at year end.
Should you share your credit card credentials?
No. Do not share credit card credentials. If someone legitimately needs a credit card in your business, get them a credit card. Get them an individual credit card. And when you give them that credit card, you own this credit card. You are responsible for the credentials on this credit card. And if they go missing, it's on you. You are going to be held accountable for this. But if you have a credit card and 2 or 3 or 4 people in the office know the credentials, and all of a sudden there's a fraudulent charge, now you don't know, was it someone in the office? Was it someone outside of the office? Who's being careless with the information? Who's being careful with the information? You don't know. So if they need a credit card, get them a credit card and make them take ownership of that information and charge them with protecting that information. And if it's just a here or there or willy-nilly process, have a separate debit card that can't be used for online purchases, so not the Visa debit card type. And you can hand that around with very little risk in the business. I mean, you're out $500 if they steal it and quit on you. That's not a big deal, but you're not out thousands.
What type of access levels can be set up at the bank to reduce risks?
Yeah, so a lot of business owners think that they need to give them their banking credentials. So if you need to give their banking credentials, you can set up an access level with every major financial institution that they have what we call read-only access, or some banks will call it agent access. It all means the same thing. What that means is they can see all the activity. So they can help with the bookkeeping, reconciling the accounts, understanding if we have enough money. But they can't actually disperse cash. That's the big one. Can they disperse cash? Can they pay a bill? Can they do an EFT? Can they do a wire transfer? Do they have those sort of credentials? You can set up that agent access, that read-only access. When we do outsource accounting functions here, we insist not only do we have our own credentials, but we have 2 sets. We have one that can do cash disbursements and one that can do read-only access, because that allows us as a firm to lock down that one that can do cash disbursements and put a whole bunch of controls on it, but at the same time, make it a little easier to access the information to reconcile the banks and book the activity, that we don't need more than one person involved for that part of the process.
Why do you need a meeting with your accounting team each month?
Okay, so I'm a big proponent of this, and a lot of people think, hey, I'm going to look at a report and I'm going to email. And I've sold my life in increments of 15 minutes for over a decade. And I got to tell you, if you want to have a meeting and a back and forth discussion with someone, do it in person or by phone. Don't try to do it right. It's just so much quicker. As a business owner, we're so stressed for time that we think if we don't book the meeting with that person doing the accounting, we're going to save time. You're just going to engage in an inefficient conversation after, or completely avoid the conversation that needs to happen. You should have questions for your accounting team each and every month. So just go ahead and book the meeting. We're going to meet, the third Tuesday of every month at 3:00. That is the meeting time, and you're going to do it every single month because you should have questions. It doesn't necessarily need to be a 2-hour meeting, but it needs to be at least 15 minutes. And you're going to go through, you're going to ask your questions, you're going to explain any variances, then you're going to go back to generating revenue in the business. This doesn't have to be a complicated task, but it needs to be done, and the most efficient way is to have an in-person meeting or a set phone conversation that you can have a back and forth discussion, investigate any anomalies, look at the source documents, the invoices that are tied to them, and you then move forward with running your business. So that's what we have for you here today. Thanks again for joining us. As always, we encourage you to hit the like and subscribe button so we can continue to deliver you tips on how to beat the odds at business. And if you have any questions, feel free to leave them in the comments below, and we'll do our best to address them in future videos. Thanks very much.